What's up, guys? Welcome to Roensch Capital Charts. Today we're taking a look at Palantir stock, ticker symbol PLTR, on a variety of time frames in anticipation of the next trading day, Thursday, May 30th. All right, guys, regular trading hours today, Palantir is down 11 cents, minus 0.52%. However, in the after hours, the stock is up. Well, let's take a look here. It's up approximately, I suppose exactly, plus 1.78%. So we do have some news here. The Pentagon was awarded a Palantir was awarded a $480 million deal from the Pentagon. So listen, not a bad middle of the week here for the stock, but let's take a look at this name and get the best possible feel of the story of Palantir as we head into tomorrow. We're going to take a look at the volume profile. We'll look at the self-fulfilling prophecy psychological levels that the traders, listen guys, big money's watching those, so we need to be aware of them. We'll look at implied volatility, which is particularly important if you're trading options, the expected move for tomorrow, and the directional bias coming out of the chain for tomorrow. So let's get started here on the 5-minute chart with that volume profile analysis. Now, we saw a little bit of a pop in volume as that news kind of got sent around. Or I suppose hit and then got sent around. So we'll take a look at that, but let's just start with intraday and do this to get a better image of how we're looking here and see if we had any bias here just really quickly. Contextual open, volume fades off, pop, cancels each other out. Too much of a risk anyway on those single bar. Very contextual through the day. Red pop, too much of a risk. Can't assign any bias there whatsoever. It doesn't mean a lot when there's only one outlying bar. I like to see consecutive bars that are out of context. Moving through the day, a very contextual close as well. Perhaps we saw a little bit of beefed up red volume around the close, but the truth is, guys, these two bars before the close and immediately after the close are going to be rebalancing bars, which contributes to it looking that way. But I tend to ignore those bars, whether they're red or green. So I can't go out of my way to pay attention to them today because we see a lot of rebalancing on those bars. So honestly, today, intraday, not a lot of information, but if we head over here, the volume profile on news events like this can look very interesting, okay? Because it's expected to see bias when you get a news event that pushes a stock one way or the other. Well, here we got a big green pop as the news hits. It's a little different to see an outlier like this on a news event than intraday. Because intraday, this could just be some fund taking a bigger position one way or the other, or liquidating one way or the other. Whereas here, news is a speed game. So what you end up with is a lot of traders making moves and algorithms, therefore making moves as the news hits. And that's why it all gets compressed into a single candle rather than the other reasoning. Okay, so I can give it a little bit more legitimacy as long as the move held after the fact, which in this case, it mostly did. And then we see, a couple more green bars, one red bar that's not ridiculously over the top, and then we fade off. So a little bit of bullish bias, clearly here in the after hours. It's not ridiculously overwhelming, but it's also not a 30% move in the after hours. So listen, let's move on here. Let's take a look at the psychological self-fulfilling prophecy levels. Again, guys, a lot of trading decisions get made around these, so we need to take a look at them. I keep my charts very simple, and that's on purpose. When the more complicated, in my experience, the more complicated a chart gets, the less effective it becomes. Because technical analysis, in my opinion, is all a self-fulfilling prophecy. It tends to, I hesitate to use the word work, it tends to be relevant because people believe it's relevant. And therefore, funds are forced to believe it's relevant, and institutions are forced to believe it's relevant. When everyone believes it's relevant because they feel like they have to because everyone else thinks so, all of a sudden it's relevant. So that's why they're very simple. White line's the 50 period, gray line is the 200 period. These are simple moving averages, by the way, not exponential on these charts. So yesterday we barely held that 50 heading into the close. We started to fade in the after hours, but again, we're taking that after hours with a grain of salt yesterday. This morning, we faded hard off the open, opening beneath, in pre-market, and then off the open, we headed up for a test of the 50 and pulled back, actually made a true test and then pulled back, and then finally into the close, we broke it and closed above it. Now, you guys know with late day breaks like this, I tend to be a little hesitant in calling it a hold. Because the truth is, we never really got a true opportunity to hold it, because we broke it and then the market closed and the volume kind of dries up. All right, in this case, it started to fade after hours, which again, that was on low volume before the news hit, so I take that with a grain of salt. Once we got the volume, the news, the volume drove us upside through both of these levels. So I'm very curious to see what happens here tomorrow. What I would like to see happen from a bullish perspective is a couple of things. I want to see that 50 period get ripped up, ideally above the 200 period, not for the sake of any crossover or anything. I think the golden cross is overhyped, and it's kind of more relevant, or I'd say looked at on the daily chart anyway. But someone might call this a golden cross if we see the 50 cross over the 200. That's not why I care. I care because I want to see the quicker moving average, the white line, the 50, getting up and becoming the immediate level to test. Because that way, if the stock continues to move upside, it can stay with it with much less effort than the 200 period can. And if we can get that 50 above the 200 period bulls, if we retest the 50, then in that case, I want to see it hold as support, get a retest. I don't mind what volume it's on. We're already above the level, right? But then a high volume bounce. Bears, for you guys, I really don't care what happens with the 50 and the 200 as far as if the 50 gets above or not. But bears, ideally, you'd break both of these to the downside tomorrow and then reclaim whichever one at the time happens to be lower as resistance, because that puts you below both in that setup that you kind of want, that look that you kind of want, with all of it descending and the lower level acting as a resistance for the actual stock. All right, bulls, we want that same look, just flipped, mirrored to the upside in an ascending pattern. Now let's move on here to the 4 hour and take a look. You can see here, guys, that here in the after hours, we literally got stuck by the 50 period on the 4 hour. We basically closed, actually we did close on the dot on the same penny value as the 50 period here on the 4 hour. So listen, that levels anyone's ball game here tomorrow. Bulls, claim it as support is the number one goal. That could give us an opportunity to start making our way up to the 200 period for a test in the near term, which is kind of the goal, to get above both, right? Have as few areas of potential resistance as possible. That's the goal. Bears, you guys want as many areas of potential resistance as you can possibly get, which means ideally rejecting as hard as you possibly can off this 50 period tomorrow. Now the daily chart, guys. The daily is the most important chart because it has the most eyeballs. All right, you have the most amount of money, so to speak, looking at this chart. We've been talking a lot about 21 to 22 as a channel. Well, in the last 4 trading days, actually like 6 trading days, 21 has really become the level to watch because it's the bottom end of that 21 to 22 channel, and it just can't make a decision. So listen, bears, if you can hold beneath 21 and actually really start confirming that as even more of a resistance level than it's already kind of acting as, that's good. That can set you guys up for a downside test of 20, which is clearly a big psychological level. Bulls, we don't want to test 20. Okay? And that all starts with kind of our last checkpoint along the way being held as support, which is 21. The real goal here, get up above 21, retest it, hold it as support, undeniably so ideally. That can set us bulls up for an upside test of the top end of that channel, which is $22 a share, and is very quickly also becoming the area where that 50-day moving average lives, which is a big area. Now, implied volatility, essentially flat today. Compared to the last week, it is, essentially flat. It's down a little bit, but in compared to the last week, like in total, it's, I would say, still in like the mid-range. Compared to the last month, IV is quite low. And compared to the last 3 months, I would also say IV is quite low. Obviously very important to know where it currently stands compared to your intended trade time frame. It's very important because you obviously, when you're looking at buying options, ideally, not only would you be correct directionally, but you'd also buy them when IV is very low and then sell when IV spikes, because that just helps you make even more money. Right, and you can obviously get IV crushed if you're on the wrong side of IV. Almost, it happens, guys, to the point where someone could be a little bit directionally correct and still lose money, not just because of theta decay, but because their Vega value tanked because IV tanked. You don't want that to be you. Now let's do the expected move here for tomorrow on Palantir. So the expected move by Friday's close compared to today's close is plus or minus 56 cents a share. Here's what we do on Wednesdays. Divide that by 2, Thursday and Friday, because we're trying to get tomorrow, right? Add back 50%, which gives us plus or minus 42 cents, and then shave a little bit off because, you know, we only have 2 days left. So adding back 50%, while that works really well early in the week, that starts to get a little heavy by Wednesday, heading into Thursday and Friday. There's only 2 days left, right? So I'm going to say that it feels like to me that, again, I've been doing this, you know, a lot now for quite a long time. So I'm not going to lie, this is educated guesswork, guys. We have to do what we can because we only are given so much information when there's weekly expirations. It'd be wonderful to have dailies, but honestly, if you think about it this way, if we had daily expirations, it would make the volatility expectation a lot easier to observe from an outside perspective, and you'd have way more people being able to accurately look at the volatility expectation. So it's almost an advantage if you exercise this muscle enough of really, really trying to pinpoint what the market expects in terms of volatility, like in between the lines of the weekly expirations. If you can really start getting that down, okay, I think it's a really big advantage because a lot of other traders won't get that down. Either they just don't care enough to practice, they don't understand it, or they're just too lazy to do it every day. I mean, it takes work. So, you know, I continue to say I think we're going to see daily expirations on these big stocks, like especially the big blue chips, within the next decade or so. But I kind of like the weeklies, honestly, because it's an advantage for people like us who want to actually go in and do the dirty work and get really good at that. So to me, it seems like the market on Palantir is pricing in an expected move of approximately plus or minus 30 to 35 cents a share tomorrow by tomorrow's close compared to today's close. Okay, now understand a couple of things here. First of all, that does not include this data predates this. Okay, so we're going to see repricing of that tomorrow because the options market didn't know that news was hitting. Okay, now in the after hours compared to the closed at 94, you know, we've already seen there you go, plus 38 cents. So it's kind of in line with the range that we just gave for the expected move. But I mean, that implies like essentially a flat day tomorrow from here, or a tiny like few penny fade. But understand that's outdated information in a lot of ways already. Okay, because we didn't have the news when the options market closed. So make sure you tune in for tomorrow's Palantir video. I'll give you the updated data at that time. All right, now the directional bias. Okay, again, this is also from before the market closed, but this is a little bit, I would say this is even more helpful than the expected move, because the expected move we will see repricing, but the directional bias is still from a large sample size of volume, at least for Palantir, from the intraday session, and the news wouldn't affect that all that much. And the reason I say that is because we've been consistently for at least 5 months now seeing heavy bullish bias out of Palantir, like consistently day after day. It's been very rare to see it flip. So 135,000 contracts total traded, 86,000 of them were calls, about 49,000 puts, call side bias. If we break that down by time frame, right, the 0 to 20 delta range, those are going to be those short-term speculators. We get about 36,000 calls and just under 9,000 puts. So volume's a bit lower, take that with a grain of salt, but out of the short-term speculators, we are also getting a call side bias. Listen, guys, if you want to get my personal daily scalp setup alerts, my in-play stock alerts, my human verified, it's verified by me, unusual options activity, that's how I keep track of what the whales are doing. I've tracked that daily for years now, well before I offered it as a service. Or if you'd like to become a Platinum one-on-one student, you can get grandfathered in at the current rate at that link in the pinned comment. Listen, I'll see you inside. And for those of you who just appreciate the daily Palantir videos, Thank you for being here. Please leave a like on the video and then get out of here and enjoy your day. I appreciate it, and I'll see you in the next one.